Closing costs, I feel like, are one of the most confusing and misunderstood parts of buying a home. So today, I'm going to walk you through every category of closing cost, what they cover, and how you can possibly negotiate them. By the end of this video, you'll know exactly what to expect, and you'll never be caught off guard 3 days before you're set to close on your new home again. All right, let's talk about it. First of all, closing costs are the fees and prepaid expenses required to finalize the purchase of a home. They cover everything from your lender's processing fees if you're getting traditional financing, to titles insurance, government recording charges, and they are completely separate from a down payment. So when you're budgeting to buy a home, you need to account for both. Your down payment and your closing costs are two very separate things. So today I'm going to walk you through every category in the exact order that it appears on a real Georgia settlement statement. By the end of this video, you'll know exactly what each charge covers and how to estimate what you'll owe at the closing table. Okay, the first section is your financial consideration. This is at the very top of a settlement statement, and it establishes the basic math of the transaction. You will see the sales price of the property, your loan amount, your deposit, which was your earnest money that you put down after you went under contract, and any seller paid closing cost. All right, let's talk about the seller credit really quick. This is really one of the most useful negotiating tools in a transaction right now. A seller credit is money that the seller agrees to put towards your closing cost as part of the deal. It doesn't change the sales price, but it comes out of the seller's proceeds and it goes directly towards reducing what you have to bring to the table in order to close. And I will tell you, in Atlanta's current market where buyers are watching every dollar, asking a seller for credit is a very reasonable negotiation right now and something that I actively pursue for a lot of my buyers. You may also see what's called a lender credit on your statement. And this is very different from a seller credit. This comes from your lender, not the seller. Lenders will sometimes offer to cover a portion of your closing costs in exchange for a slightly higher interest rate on your loan. You're essentially trading a lower upfront cost, so the money that you have to bring to close, for a little bit of a higher monthly payment over time. Now, whether this makes sense for you or not depends on how long you plan to stay in the home. The longer you stay, the more the higher interest rate is going to cost you over time. It's worth running the math with your lender before you decide to do something like this. Okay, the second section is prorations and adjustments. This one really isn't a fee, it's more of a calculation. Property taxes in Georgia are paid in arrears, meaning they're paid after the fact for the period already lived. So at closing, the seller owes taxes for the portion of the year that they owned the home before the closing date. That amount gets calculated and credited to you as the buyer because you are going to be responsible for the full tax bill when it comes due. And in Atlanta, that's towards the end of the year. They come out and due around September and October. Okay, so when that bill comes due, you are going to pay it, but the seller has credited you for the time that they've lived in the home. It's a credit to a buyer, not a charge. But it shows up on the statement and buyers often wonder what it is. Okay, this is a big one. The third section are loan charges. These are the fees that your lender charges for processing and funding your loan. Every lender has them, but what they add up to can vary dramatically from lender to lender. And I mean dramatically. I once saw a lender charge of $8,000 in loan fees on a transaction. The statement I'm looking at right now has an underwriting fee of $1,095. Same loan, completely different number. This is exactly why shopping for lenders matters. You might see these fees labeled something like underwriting fees, processing fees, loan origination fees, or some combination thereof. The names can vary, but they're covering the same basic work. evaluating your application, verifying your financials, and getting your loan approved. Get quotes from at least 2, if not 3 lenders, and compare these numbers side by side before you commit to anyone, because again, one lender can charge you $8,000 for the same loan and another one can charge you $1,100. It's a huge difference, so pay attention to those. Okay, another fee that you might see show up on a settlement statement if you opted in for it are loan points. If you have chosen to buy down your interest rate, the cost of those points shows up here. Each point is 1% of your loan amount and typically lowers your rate by 0.25%. It's an optional cost, but one worth running the math on with your lender if you're planning to stay in the home long term. Okay, another fee that you will see pop up there is what's called an appraisal fee. This is the cost of an independent appraiser confirming the home is worth what you were paying for it. Your lender requires this to protect their investment. So in the instance that you don't pay your mortgage, they just want to ensure that they can sell the home for what you paid for it. In Atlanta right now, I see them around $500 to $650. It's a fee that you, the buyer, will pay to get that appraisal done. Okay, next up you have a credit report fee, which is exactly what it sounds like. This is the cost of pulling your credit report as part of the loan application, and prepaid interest, which I'll explain in more detail in the next section. It also appears here on some statements. The 4th section is impounds. This section is where a lot of buyers get confused, and it's probably the most important one to understand because it often makes up the largest chunk of what you are going to bring to the closing table. If you are putting less than 20% down, your lender is going to require what's called an escrow account. Each month, a portion of your mortgage payment gets set aside in that account, and then the lender uses those funds to pay your property taxes and your homeowner's insurance when those things come due. At closing, they usually collect what's called an initial reserve, so amount of money that they use to set up those accounts. So on the impound section, you'll see a line for homeowners insurance reserves and a line for property tax reserves. These are not extra fees. This is your own money being held by your lender to ensure that those bills get paid on time. Then let's talk about the prepaid interest. This one surprises people every single time. Mortgage payments are paid in arrears, meaning when you make your payment on the 1st of the month, you're actually paying for the previous month. Because of that, your mortgage payment isn't due until the 1st of the month after your first full month of ownership. All right, so let me give you this example because this may help you understand it a little better. Okay, let's say you close on March 20th. Your first mortgage payment is not going to be due until May 1st. Let's say you close May 15th. Your first mortgage payment is not going to be due until July 1st. But interest starts accruing the day you close. So at closing, you pay the interest from that day, so the day you sign papers, through the end of that month. So the earlier in the month you close, the more prepaid interest you are going to pay. And the later in the month that you close, the less of that money you will have to bring. And here's a pro tip. If cash to close is tight, closing towards the end of the month is a simple way to reduce the amount of money that you have to bring to the closing table. The 5th section is title and settlement charges. This section covers the closing attorney's work and the insurance policies that protect both you and your lender on the transaction. In Georgia, closings are handled by licensed real estate attorneys, not escrow companies, or a lot of times in a lot of other states, maybe they're handled by title companies. Here in Georgia, we close with closing attorneys. And in my opinion, I think this is great because you have an actual attorney reviewing every document and overseeing the entire transaction. I love it. Okay, the closing fee is really just covering the attorney's work facilitating the entire transaction. The title examination fee is the attorneys reviewing the chain of ownership on that property. So they're confirming that the seller legally owns it and that there are no outstanding liens or judgments and that that seller has the right to sell that property to you. The title binder is a preliminary commitment from the title insurance company confirming that they're willing to insure that property. Okay, this is important to understand. There are two separate title insurance policies, and it's important to understand which one is which. Okay, first up, let's talk about the owner's title insurance. An owner's title insurance policy protects you as the buyer. If something surfaces after closing, like an error in public records, maybe an old lien that pops up that wasn't discovered, or a dispute in ownership claim from 30 years ago, whatever the case may be, your owner's policy will cover you. In Georgia, this is typically paid by the buyer. It's a one-time premium that covers you for as long as you own the home. Even if you're buying a home with cash, do not skip this and always, always, always get an owner's title policy. Okay, the second one is your lender's title insurance. And this is a completely separate policy that only protects your lender, not you. Think of it this way. Your lender is putting up hundreds of thousands of dollars to help you buy this home, and they want to make sure that if a title problem comes up after closing, that their money is protected. And it only covers the loan amount, not the full value of the home, and it actually goes away once you pay off the mortgage. Your lender is going to require this as a condition of the loan, so you don't get to opt out of this one. And honestly, this is exactly why you want your own owner's policy, because theirs does not cover you whatsoever. Number 6 is commissions for the real estate agents. So this is where your agent's compensation shows up on the statement. And I will tell you, the listing agent's commission is going to be paid by the seller. The buyer's agent's compensation is typically in Georgia also covered by the seller. But listen, there is not a 100% foolproof guarantee. So it is important that you have a conversation with your buyer's agent before you ever look at a home of how their compensation is going to be covered, whether you're going to ask the seller for it, or in a rare instance that a seller isn't covering that, how that's going to be worked into the deal. It's really important to have that conversation before you ever start the process. The 7th section is government recording and transfer charges. These are the government fees for officially recording the transaction in public record. The recording fee goes to the county clerk for documenting the deed and mortgage. There's also a small, what's called a GRMA fee, and that stands for Georgia Residential Mortgage Act, which goes towards the state's mortgage assistance program. The 2 charges in this section are specific to Georgia, and they catch a lot of buyers off guard, especially people relocating here from other states where they don't do this. The intangible tax is a state tax on your mortgage loan. Georgia charges $1.50 for every $1,000 of your loan amount. So on a $400,000 loan, that's $600. On a $500,000 loan, that is $750. It's a Georgia-specific cost that doesn't exist in many other states, and it's one of the first things that I flag for buyers coming in from out of state. Okay, then there is the transfer tax, and this is calculated at $1 per $1,000 on the sales price. So on a $360,000 home, that's $360. On a $500,000 home, it's $500. Straightforward, relatively small, but a real line item on your statement. Number 8 is homeowner's insurance. A lot of people don't realize that your lender is going to require 1 full year of homeowner's insurance to be paid upfront at closing. This money goes directly to your insurance company. It's coverage for your first year of home ownership, and it's just collected at the closing table. And this is important to note. Those fees, I see them range anywhere from like $1,000 on a settlement statement to a few $1,000s depending on your coverage. So again, it's definitely one of those things to pay attention to because it adds up. So when you add everything up, loan charges, prepaids, title fees, government charges, and insurance, closing costs in Georgia on a conventional loan typically run anywhere from 2 to 3% of the purchase price, not including your down payment. So On a $400,000 home, that's roughly $8,000 to $12,000 extra. So completely separate from a down payment on a home. So for example, on a $400,000 house, let's say you're planning to put 5% down, that's going to be $20,000 just for your down payment. You also have to account for 2 or 3% for closing costs. So that's going to be, let's just cut it down the middle and say 10 grand. So in total, $30,000 is what it's going to cost you to close on a $400,000 home. So be prepared for that. And if you can get some of those closing costs paid by the seller, great. And try to negotiate that. But listen, it's not going to be a guarantee on every home. It's really going to be house to house and very situational. And here's my best advice. The best thing that you can really do is ask your lender for a loan estimate. It's a standardized document that they're required to provide you, and it breaks out all of these charges specific to your situation. Review it very carefully and honestly compare theirs with another lender or two, okay? Ask questions and make sure your numbers line up with your budget before you're deep in the process. And if you want to go even deeper on this, before you start thinking about closing costs, you need to know what and how you can determine what you can actually afford in the first place. And I cover that in the next video. Link is on the screen right now. And hey, I'm just going to throw this out there. If you want to sit down with me and walk through your specific numbers before you start the process, book a call with me. Link is in the first line in the description below, and that's exactly what those calls are for. Thank you so much for watching. I hope to see you on the next one.